Dear students, today we are discussing another comprehensive problem from retirement of a partner. The speciality of this problem is that in this problem we will see how to prepare partner's current account at the time of retirement of a partner. You know that when it is required to prepare a current account, yes, when the partners prepare the capital in fixed capital method, we have to prepare the current account also in the name of all the partners. Here is the question. You can write down this question in a piece of paper and can see how each adjustments are taken in solution part. Okay. Here three partners P, Q and R, they share the profit and loss in proportion to their fixed capital. There itself it is mentioned that they are maintaining fixed capital method. So it is clear that we have to prepare partners current account. The balance sheet is given on 31st March 2020, and in that general reserve is there. We know that it should be credited to the partners capital account in their old profit sharing ratio. Then in balance sheet asset side there is profit and loss account. That means profit for or account balance for the year ending 31st March 2020. What it means, whether it is profit or loss. Yes, we know that if there is loss, it will be shown on the asset side of the balance sheet. Okay, so that is to be debited to the partner's capital account. It's clear? Okay. Then on his retirement, on the retirement of R, goodwill is to be valued at 2 years purchase of the average profit of last 3 years. The profit given here for 2019 4 lakh, 2018 4 lakh and 2019 3 lakh. And for 2020 we have loss here. So with that we have to prepare or find out goodwill of the firm and the retiring partner share of goodwill also. The next adjustment, provision for doubtful debts will be maintained at 5% of debtors. So we have now 1500, that means 10% of debtors is given as provision for doubtful debts. That is to be maintained now as 5% of debtors. That means debtors is decreasing. Okay, it is decreased to its half. Then land and building will be appreciated by 90,000. There is increase in land and building by 90,000 rupees. And plant and machinery will be revalued to 1,80,000. Plant and machinery we have 2 lakh. That is revalued to 1,80,000, means that is decreased by 20,000. Then P agreed to repay his loan. P agreed to repay his loan, means P will give back the loan, and that loan repaid by P is to be utilized to pay R. We have to pay off R no. For him, the amount paid by P will be utilized. Okay, and the balance, if any, will be transferred to his loan account. Will be transferred to R's loan account, bearing interest at the rate of 12% per annum. So what you have to do? You have to prepare revaluation account, partners current account and capital account of partners, as well as the balance sheet on the reconstituted firm. So this is the question. Now let us see how the solution will be. This is a revaluation account here. So revaluation account is prepared, and in the first adjustment, what is given? Provision for doubtful debts is decreased. Provision for doubtful debts is a liability. Liability decreased will be shown in the credit side of revaluation account. So by provision for doubtful debts, 750 decreased, that is to be written here. Then next, land and building. Land and building appreciated. That means asset increase. Asset increase also will be shown in the credit side. 90,000 is the amount. Then next says that plant and machinery will be reduced. Plant and machinery reduced. Asset decreases, where to show? To the debit side of revaluation account, to plant and machinery. How much? 20,000. Okay. Then next adjustment, A agreed to pay, sorry, P agreed to pay off his loan. So that will come into his capital account. So no need to write that here. Okay. So all the adjustments related to revaluation account is over. What is the total amount? Total amount shows credit side it is more. So 90,750 can be shown as credit side of the capital revaluation account. That will be taken to the debit side, and the balance 90,750 minus 20,000, that is 70,750. Where it is to be transferred? Yes, to the current account, not the capital account. It will be transferred to the current account of Partmers, current account of P, Q and R, in the ratio of 5:3:2. That means 5 lakh is to 3 lakh is to 2 lakh in their capital ratio. Okay. Now let us prepare the current account of Partners. Why we have to prepare the current account first? Because here the current account balance of R is to be transferred to his capital account for the final payment. So in order to transfer the current account of R to the current account balance of R to his capital, we have to prepare current account first. So let us prepare the current account of P, Q and R. So it has no opening balance. Okay. So what we can transfer first? In revaluation account, you can see it is written to current account. So what can be written here? By revaluation account. The accounts of P, Q and R. 35,375, 21,225 and 14,150. Okay. Then we can write the general reserve. General reserve is transferred to the current account, that we are writing here. General reserve will be shared among the partners in the profit sharing ratio, old profit sharing ratio, that is transferred. Then now we have to find out the goodwill of the partners, and that is to be adjusted in their current account. So let us see how to calculate the goodwill calculation. So calculation of goodwill, it is given the total profit of the 3 years given. That means 4 lakh, 3 lakh and last year there was loss, so it should be deducted. So 4 lakh 59,000 is the total profit. Average profit, total profit divided by 3, 1 lakh 53,000. And we have to calculate goodwill. Goodwill is 2 years purchase of actual average profit. So goodwill at 2 years purchase of actual average profit 3,06,000. That is the total amount of goodwill for the firm. Now what we have to find out? Yes, we have to find out our share of goodwill. Our share of goodwill is equal to 3,06,000 into 2 by 10. That is his share of profit. Okay. Now let us see what is the journal entry for treatment of goodwill. So here, who has to get? R has to get the amount. So who has to pay? Yes, here P and Q have to pay. So we have to write here P's current account debtor. P's current account debtor. Next, Q's current account debtor. So Q's current account debtor to R's current account. R's current account. So 61,200 is the amount that is shared among P and Q in their gaining ratio. Gaining ratio is 5:3 because old ratio was 5:3:2. Out of that, 2 part is gone. So remaining 5:3. So 5/8 and 3/8. That is their gaining ratio. Okay. Now this is to be entered in the current account. So what we can write in P's and Q's current account, we have to write to R's current account. To write here to R's current account. Okay. To R's current account in the column P and Q. Okay. Now in R's column, R's capital, R's current account, we have to write by P's current account and by Q's current account. In R's column, we have to enter the amount. Now, goodwill entry is over. So here we can write next profit and loss. We have not shared the loss. We have to share. Loss is shared in the old ratio. It should be shown in the debit side of the capital account. So let us write the total. Total 1,58,750 for P, then for Q 95,250, then for R 40. For R here credit debit side is less, so for R credit side is more. How much? 90,350. That will be shown to the debit side. Okay. So what is the difference? How much is the difference? Yes, we have to write down the difference for R. R's difference is 42,150. 42,150. Okay. 42,150 will be shown here. That will be transferred to his capital account. So we have to write here to C's capital. Sorry, R's capital. So R's capital is written. Okay. Then now R's balance we have got. Then let us write the balance for P and Q. It will be their balance, total amount will be transferred to their credit side, and we can write the balance here for P and Q. 85,875 for P and for Q 51,525. Okay. So this is the condition of their current account. Then this current account balance of R will be transferred to his capital account. So for that purpose, let us prepare the capital account of P, Q and R. In that opening balance, it is given in the balance sheet. Okay, 5 lakh, 3 lakh and 2 lakh. Then R's current account, there 42,150 is there, that can be credited to his account and can be written here as R's current account. Okay. Then next debit side. So we have to pay money to R by redeeming loan account of P. So P's loan is there. We have in the asset side. P's loan we have 35,500 and he agreed to repay his loan. Okay. So that amount is there. So that is 35,500 that we have to write here. Okay. So that amount we have written 35,500 to bank. That money from the loan recovery, that money is given. Then remaining amount will be shown to his loan account. So to R's loan, we can write the remaining amount. For that we have to see what is the remaining amount. Let us total his capital account. That will be shown to the debit side and we'll write down the balance here. So 2,06,650. Okay. So that is the balance amount that will be transferred to his loan account. Okay. Then let us complete the capital account of other partners also. So in the case of other partners, for P it is total comes in the credit side 5 lakh and Q also 3 lakh comes in the credit side and that will be shown in the debit side of their capital account and we'll find out the balance. To balance carry down 5 lakh and 3 lakh for P and Q. Okay. So this is the case. Now let us prepare balance sheet. So balance sheet as on 1st April 2020. So that we have to prepare with the heading liabilities amount, asset amount. Let us write the asset one by one. So first asset we have bank balance we have. So bank can be written 2,000. Okay. Then that 2,000 we had in the opening bank balance. Okay. That amount we have to write here. Bank balance we have not 2,000, it is 21,000. Okay. Bank balance is 21,000 only in the old balance sheet. Then comes next, which is the next asset? Yes, stock is there. Then sundry debtors is there. So stock we have to write. Then after that we have to write the sundry debtors. Yes, now stock is written 9,000. Then let us write the debtors. Here debtors is there. Less provision for doubtful debts. Yes, debtors inner column 15,000. We have to reduce now the provision for doubtful debts 5%. 750 is deducted and remaining 14,250. Then let us write the next asset, plant and machinery. Plant and machinery, we know that it was a decrease of 20,000. After that 1,80,000 is written. Land and building, we had in the balance sheet an amount of rupees 6 lakh. So that is increased to 6,90,000. Then next we can we have prepared here P's current account. Current account for P and Q, we have got the credit balance. Okay, so that amount we have to write here. That means they have to bring this much money to the firm. So P's current account and Q's current account, we have to write their current account balances. Profit and loss debit balance was there, that we have shared, so no need to write that again here. Okay, so all the assets are written. Now let us see the liability side. Capitals for P and Q, we have to write. Their capitals are fixed, so 5 lakh and 3 lakh is the balance that is to be written. Then R's loan. Now we have to pay R his capital account balance after paying cash 35,500, remaining 2,06,650 we have to pay. So that loan we are writing here. Then comes creditors. Creditors we have here 23,000, that is written. Then outstanding salary was there. Outstanding salary 7,000 is to be written. Then next Q's loan, it was there already, that had no change, 15,000 is written. Okay, so these are the assets. So let us write down the total of balance sheet, 10,51,650. So that is the end of the solution to this problem. I hope all of you understood this. You can try to solve this question once again. Okay, and find out the similar question from your reference book and solve it. Okay, thank you.